Welcome back. Well, you're listening to, or you're watching rather, The Money Show. And, risk assets, that is to say equity and specifically cryptocurrency, since the start of 2022 have gotten beaten down quite significantly. In fact, if you're talking about the Bitcoin, it has lost over a quarter of its value in just 2022. We're trying to understand the context here. If you do hold Bitcoin and any one of the cryptocurrencies available, then should you bear in mind? How should you understand this recent fall, and what should your strategy be? We're joined by Ajeet Khurana, who has spoken to me about this in the past, and who I'm sure I'll turn to in the future as well, because he understands this space much better than I do. Ajeet, thank you so much for taking the time, and hopefully I will end this conversation with a little bit more understanding than I have right now. Why are we seeing a sell-off at this moment in cryptocurrencies globally? Could you contextualize it for us?
Yes. So while supporters and proponents of cryptocurrency would categorize it as a non-correlated asset with other asset classes, the fact is that all assets are correlated with liquidity in the market. With the potential impending interest rate hike in the US, the fear is that liquidity will get sucked out of the market, which explains why so many markets are falling, and that also explains why cryptocurrency is falling. But to contextualize it further, please realize that the value of all cryptocurrencies, whatever names you might have heard like Bitcoin, Ethereum, and all the rest put together, is not even equal to the value of just one big stock such as Apple computers. Because this then becomes a very, very micro cap asset, pretty much like small cap and micro cap assets in other markets. When volatility occurs, it occurs in a more exaggerated fashion.
Okay, but let's talk about this in a little bit more detail, because I want to understand why this time around, for example, there is this conversation, Ajeet, about altcoins, and you're talking about Ethereum being the most popular among them, seeing a bigger drubbing than the Bitcoin. The gap between the two is widening. Why is that? Why are altcoins being beaten down so heavily?
Actually, when we look at the downside analysis, what you have said is absolutely correct. But if we move back like only as much as 6 to 9 months, the reverse was also true. So what I have seen in all asset classes, altcoins, for example, if I keep Ethereum away, because Ethereum is also a pretty major coin, there is really no coin which accounts for more than a very minuscule percentage of the market cap of crypto. Bitcoin is at 40%, Ethereum is around 20-25%. So all the rest, the thousands put together, account for 35. Given such a small floating liquidity, if a very tiny proportion of people decide to sell, the market goes down and the other way around. But again, to contextualize this, it is important to note that we have a scenario even today where the number of new participants in the market, I'll just randomly or rather simplistically define new as people who came into crypto in the last 12 months. These tend to be a significant proportion of all the people who are in crypto. This is not true in the stock market. Like barely a few percentage, maybe 2, 3, 4% new people came into the stock market in the last 12 months compared to the historical number. These people have all made huge profits because they entered at prices better than this. Now when they see their profits getting completely eroded over a 12-month kind of scenario, they are kind of hurriedly booking that profit. And that has also caused to the rapid fall.
Okay. I want to talk about the participants that you mentioned just a little bit more. Because, Ajeet, you've been watching the crypto market for quite a while now. And one of the factors that was spoken about in 2020, in 2021 as well, to a large extent, is the number of institutional investors that have come on board. We're seeing those investors sell now. So how does the retail, and I don't want to say retail investor, but how does the retail participant react to this?
Actually, there's two pieces of negative news on the institutional front. One is indeed that corporate balance sheets, which took some exposure to crypto, specifically Bitcoin in most cases, thinking that this was an inflation hedge, then saw this wild short-term ride. I think that they are overreacting, but all the same, and they said, this does not seem like the hedge. So that is bad news number one. Bad news number two actually took place one step before that. And unlike, Elon Musk's famous tweet about Tesla buying $1.5 billion worth of Bitcoin, which zoomed up the price by 10%, which a lot of people, and I must confess, I am one of them, thought was a precursor to many other institutions, a very widespread adoption of Bitcoin on the balance sheets. To begin with, it was not as widespread as we feared, and much, much less than we thought. And then some of those people are now selling. So I think that on the institutional side, it has definitely not been something that has boosted the market, quite the opposite.
Okay. Having said that, and I'm sure that you've spoken about this in the recent past as well, and people who have been watching the news will be aware of the Metaverse, which is not just what Facebook is doing. A lot of software companies, all the big ones, are working to some extent or the other on the creation of the Metaverse, which is the next virtual reality step that we take as a civilization. Where, according to you, is the potential for crypto in this context? And therefore, taking a step further, Ajeet, how does one understand the store of value as it exists right now in a scenario where everybody's selling, seemingly?
First, I thank you for using the word civilization, because only that word would be able to capture how massive the metaverse paradigm is going to be. The metaverse is going to be, I would say, at least as big as all of social media is today. And social media and messengers. So we are all spending hours on some form of social media or messengers that is going to actually be substituted largely with the metaverse. Now, the metaverse does not have to be decentralized. Facebook, Meta, is not decentralized. However, even if that is the case, because unlike, so for example, if I have a WhatsApp messenger and you have, let's say, Telegram, I cannot send you a message from WhatsApp to Telegram. Unlike, I can send you a message from Gmail to Yahoo Mail. The absolute, I think the remarkable thing about the metaverse is that it's going to be interoperable. So I can have the same avatar, the same features, the same benefits in one metaverse versus another. So while the metaverse may or may not be decentralized, I hope it is decentralized, but there will be elements within it which will be decentralized. And when decentralization comes in, there's only one way to run a DAO, which is a decentralized autonomous organization, and that is to power it with certain tokens which offer incentives and governance. These are called crypto tokens. That is the future.
Okay. Now, having said that, and I hesitate to call this an asset class because I think that conversation is still something that is being had globally. We're talking about regulations that could affect it even here in India. Ajeet, in the recent past, in September of 2021, you had China and PBOC of China banning cryptocurrency use. Last week, you had Russia talking about the banning possibly of mining there and the use of cryptocurrencies. How do you think traditional authorities, monetary authorities, and the regulations that they make could affect the utilization of cryptocurrency?
So I must, qualify what you said by saying that while China did ban cryptocurrency, it banned it for the fifth time. It was some shade of banning. This was the fifth ban. That is why the markets did not really react like they did the first or the second time. And Russia also has banned some version of cryptocurrency activity more than once before. Having said that, you are right. If we scream decentralization from rooftops, who are we decentralizing? We are decentralizing potentially governments, corporations, central bankers, etc. Now, that is who is the one who's going to take the most offense to it? The governments, the corporations, and the central bankers. And guess what? To really get this mainstream, whose permission do we need, or rather, whose assent and positive contribution do we need? The governments, the corporations, and the central bankers. So there is an inherent contradiction in it. So instead of this emerging as a collaborative industry, it is turning out to be a confrontational industry. So some countries which are very liberal in their approach have said, fine, let you do what you want and you do what you want. Some others have taken a very, very harsh view, and you talked of banning around the world in few countries, and the rest are kind of in a state of flux where, for example, in India, last budget session and then winter session, a bill was listed in the agenda, and frankly, the world moves so fast in crypto that it is impossible to come up with crypto-specific legislation which will have some life before you would have to change it.
Okay. It's interesting what you're saying because reportedly in places like Turkey, where you have hyperinflation, there are people that are turning to cryptocurrency to say maybe that's a better store of value. But having said that, the debate about what you just said in terms of the monetary authorities and the fact that decentralization would affect monetary policy is certainly something to bear in mind. A lot of people have treated, Ajeet, the cryptocurrency and putting money in cryptocurrency like a get-rich-quick strategy. And I've heard numerous stories of people getting in at levels of $50,000+ for the Bitcoin and losing money very, very quickly. Do you think that people have to have a multi-year approach if they are putting some money in cryptocurrencies? And in no way am I asking you to advise people to invest in it.
Absolutely. So I must tell you that, when you think of long term in the context of real estate, even 5 years doesn't seem like long term. 8, 10, 12 years seems like long term. But when you think of long term in the context of the stock market, then 3 years starts looking like long term and certainly 5 years because of the characteristic of that asset class. And I think that the way the market is presently perceiving crypto, even 1 year and certainly 2 and 3 years seems like long term. And that is because there even, I hate to admit this, but even people who are invested into crypto, I would say greater than 50% of them are not sure about the fate of crypto, let's say a few years down the line. As a result, that reduces the span for which they consider participating in the market. But yes, I completely agree that if you are not trying to day trade or try to get rich quick, which by the way, anything that is get rich quick is also get really poor quick. Okay, so please keep that in mind. There's always two sides of the coin. I think that, for instance, when crypto went up, let's say the markets went up 2 to 6 times between November 20 and let's say April 21, I didn't sell anything. And now when they have gone down to about close to 33% down from April 21, I have once again not sold anything because my approach is that this is something that's going to grow. I wish I could capture all the peaks and the troughs. I don't have any such ability, nor does anybody else. So my suggestion to people would be that, sure, buy whenever you like and sell even rapidly if you like, but while investing, please take at least a 1+ year view, ideally a 3-year view. Then of course, if you get an opportunity to sell before that, nobody's stopping you.
And try to understand the underlying and how it works is something that I think would be excellent advice in this case, especially because you're putting your hard-earned money into it, right? So Ajeet, thank you so much for joining in and for contextualizing everything for us. It's been an absolute pleasure speaking with you. It always is.
Thank you, Alex. Thanks for having me.
All right, now we've got more lined up for you, but we have to take a quick commercial break, so do stay tuned.